Today in Cryptoland, Bitcoin's Satoshi Vision is facing mass delistings as the community is finally fed up with Craig Wright's bullying. LedgerX Bitcoin futures contracts might end up beating BAKKT to the market. Endowments are heating up the crypto markets big time with their big money and mining Bitcoin in Australia with good old-fashioned coal. The big story today is that Binance has announced that they are delisting Bitcoin's Satoshi Vision. Shapeshift and blockchain.com also confirmed that they would indeed, after the Binance announcement, also be delisting. And Kraken is likely to do so in the coming day or so. I would expect even more exchanges to follow suit. The free markets are deciding right now, and the free markets are deciding against intimidation tactics and bullying. They are deciding against the worst kind of fraud. Interesting that in the free market conversation, many of the people who are against the delisting don't actually count the private for-profit businesses which actually host these marketplaces, that being the cryptocurrency exchanges, as actors themselves. Cryptocurrency exchanges are not public goods and are some of the most important free market participants in the crypto economy, and they are clearly making their voices heard with the statement of delisting. Remember, no coin has a right to liquidity. No coin has a right to access fiat on and off ramps or to be supported in wallets. Being listed on a centralized exchange is a privilege, not a right. Now, you are there at the good graces of this private for-profit business, something to remember. That also, of course, underlines the need for better decentralized exchanges with good liquidity. But that's another conversation for another day. Now, I also do not see this as censorship, but honestly as a business decision from astute companies. The behavior of Craig Wright has never been good, but has become absolutely out of hand recently, with lawsuits being leveled against Twitter personalities for stating what is really the obvious facts that everyone understands. This kind of low vibe bullying is the straw that broke the camel's back, and the camel in this case is represented as CZ from Binance. And in true Binance fashion, when Binance goes out and does something, the rest of the crypto industry takes note and very often follows along. Well, what happens next, I think, is the real question. BSV will dump, and it is currently dumping, and it's dumping hard, and it will continue to dump more if more exchanges delist BSV. Now, that is one dip that I am certainly not buying, but I have never been a supporter of BSV, nor am I a fan of the fraud Craig Wright. I'm not really sure what anyone is. But the real question that we want to look at here is what will happen if Craig Wright and Calvin Ayre start dumping Bitcoin to crash the markets and to pump up the price of BSV. Because let's keep it real, it is Craig coin. But I would suspect that those two guys currently lack the massive funding needed to take down the markets. Unless, of course, Craig Wright wins the court case that he's currently working on in Florida and manages to actually steal the Bitcoin from David Kleiman's estate. This is the so-called Tulip Fund. It is hundreds of thousands of Bitcoin. Captain Megalomania would be able to really mess the markets up, especially in the short term, with that kind of money to dump in. What is your opinion on the delisting of BSV? Good decision? Bad decision? Let me know down below. Next up is a kind of story that I think we are going to be seeing a lot more as the year progresses. Big money players buying into crypto companies. The Harvard endowment invested up to, the number's not necessarily certain, $12.65 million in the BlockStack token sale. Now, BlockStack applied with the SEC to be able to raise $50 million. Play by the rules, and there are hosts of companies out there or endowments out there willing to be buyers of your token. The security token game will attract so much money. This is just a tiny bit of evidence of that. Security token issuance platforms also, I think, are going to benefit from this boom. And actually, while this story about Blockstack is a great example and has certainly got a lot of publicity over the last few days, according to a recent survey, 94% of endowments have been allocating to crypto-related investments throughout 2018. That is absolutely massive. Damn! Now, to be fair, that is out of 150 surveyed endowments. 89% of those were US-based. The other 11% were in Canada and the UK. While Harvard's endowment has made a big splash with the Blockstack story, the likes of Yale, Stanford, MIT, and others are all getting into crypto. The question is no longer when will the institutions arrive. They're already here. They're already buying crypto, and more are going to be announcing their involvement all of the time. This is actually really excellent news for crypto because it means that these endowments, which manage really stupid amounts of money, they're here now, and they are investing kind of on the quiet, usually, in cryptocurrencies, and their approval will bring others in, which will bring, of course, institutional FOMO, which will likely fuel more retail FOMO. Fidelity and BAKKT will be very, very busy in the coming years. Do you have your one Bitcoin yet? Over on the financial products related side of the news today, LedgerX has revealed that they are working hard to be backed to launch their own physically backed Bitcoin futures. Now, cryptocurrency derivatives provider LedgerX, if they can pull this off, will become the first US firm to offer physically settled Bitcoin futures contracts. Now, of course, if they can just get the CFTC to play ball with them, they can make this happen. LedgerX announced on Monday that it has filed for a designated contract market or DCM license, which is absolutely essential in allowing LedgerX to offer physically settled Bitcoin futures products to its customers. Once approved, it will add to the list of Bitcoin products that LedgerX offers to its customers, including actual Bitcoin, which their customers can buy, but also Bitcoin options, and of course, the Bitcoin futures. LedgerX will also be available for retail investors, which is, I think, pretty cool. And with its new offering coming out, I think there'll be a lot more retail investors interested, but they already cater to 200 plus firms. Juthika Chow from LedgerX, who serves both as the Chief Risk and Operating Officer, was quoted as saying the following: "We'll be able to service customers of any size. We won't be restricted just to institutional clients." That is, of course, great news for anyone who wants to partake in their products. The company filed for a license to offer futures contracts all the way back in November 2018 and has been working with the CFTC since November, and they say that the conversation, well, they're labeling the conversation as constructive currently. BAKKT has been put on notice here, I think, and really, there is, to be honest, a lot of room for many different futures contracts, much like there'll be room for many different ETFs. The market is so small and so potentially big. Over in France, the French government is reportedly going to try to convince other European Union member states to adopt cryptocurrency regulations which are similar to its own. This is according to a report coming out of Reuters. Now, last week, France passed a financial sector law that seeks to entice cryptocurrency issuers and traders to set up shop over in France. To do this via establishing a set of rules that will essentially give them official recognition, while also trying to ensure that France can, say it with me, get their taxes. course, it's all about taxes. The new laws will allow companies wanting to issue new cryptocurrencies or even to trade existing cryptocurrencies, essentially exchanges, to be able to get a certification whereby authorities would verify who is behind a new coin issuance or a trading platform, as well as checking the company's anti-money laundering rules, and even going so far as to check the company's business plan, which is actually, to be honest, not bad at all. Regulations, when you consider the amount of fraud in cryptocurrencies, they can be a good thing. And these rules aim to prevent outright fraud, of course not the losses that investors might experience via a bad investment. The government has not yet released the specific details of how all of this is going to work. But in general, this seems to be the plan that they're moving forward with. And I think that overall it's positive regulation aimed at actually encouraging companies to do business in France. And of course, if France can actually convince other countries across Europe to adopt these similar rules, then it will be able to be a EU-wide set of standards while providing basic protections to investors. Bitcoin mining's footprint is, of course, a concern that we must all confront as a community. Renewables are key for running Bitcoin in the future, as well as the continuation of, that thing we all enjoy so much, life on planet Earth. Many conversations with Bitcoin mining, of course, center around the amount of energy used, but to be honest, I'm really much less concerned with the amount of energy used versus the kind of energy used, because these are incredibly different topics. We need to move Bitcoin mining over to solar or to other renewable types of energy, as well, of course, as continue to push for even more eco-friendly and efficient Bitcoin mining computers. Recently, the numbers were crunched and it indicated that the previous 10 years of Bitcoin mining used about as much energy, important word there, as 3 days of US car driving. Now, to be honest, it's hard to make this as an exact comparison, even though that sounds like a great number, but due to the high rate of renewables and also the amount of coal being used in Bitcoin, all kinds of other factors, it's really hard to make an oil-based comparison like we have with cars. And look, you can bring in all kinds of whataboutisms like cars and planes and banking and gold mining and the global war machine, and that's all fun. But the reality is, whataboutisms aside, we need to take care of our own house in the crypto community and work towards increasing the renewable energy footprint of Bitcoin mining and minimizing the dirty power footprint. This is an industry that's going to last hundreds of years if we do it right. Thank you so much for watching today's video. As always, you guys are supremely awesome. If you haven't checked out Cryptocurrency Explained yet and you are new around here, make sure to check that out as a 5-hour free educational course here on YouTube, also over on Udemy. Or if you know someone who wants to get into cryptocurrencies, you can always send them to thecryptolark.org. If you enjoyed today's video, leave a thumbs up on it. Subscribe to the channel if you are new around here. Long live the blockchain. And peace out till next time.